Ford is one of the largest and most profitable automakers in the world, with some very loyal customers buying its F-150 and SUVs that are extremely profitable vehicles. As a matter of fact, I'm an F-150 driver myself. Now, can Ford stock beat the market? I'm going to weigh in with my analysis and prediction later, but first let's take a dive into Ford's business and a closer look at its stock. Ford has been a staple in the automotive industry for over a century, known for its iconic models like the Ford F-150 and the Mustang. Recently, Ford has focused on restructuring its business to improve profitability and competitiveness. The company has made significant investments in EVs and autonomous driving technology, but those investments have been slow to add to the bottom line and will continue to cost Ford a lot of money as it invests in R&D and CapEx to transition to more EV and hybrid manufacturing. As a result, free cash flow per share is down by more than 60% from the recent peak, while the stock is down 57% from the 5-year high. Now, the bull case for Ford centers around its strong brand loyalty and transition to EVs. Ford's commitment to electrification has paid off with the success of the Mustang Mach-E, and while the electric F-150 hasn't been as successful so far, Ford has planted the seeds for an electrified future. In the meantime, it's still an incredibly profitable cash cow business when demand is healthy. The F-150 has been the best-selling vehicle in the U.S. for decades, and along with Ford's impressive SUV offerings, earns really strong margins. Ford's captive financing business is also a profitable asset, helping offset the ongoing losses from its EV business as it builds the scale in that business. Now let's talk about the stock, which looks really cheap by most metrics. Shares trade for less than 9 times trailing earnings, a dirt cheap 4.6 times free cash flow, and the dividend yield is nearly 7% at recent prices. Those all make it look like a deep value price for a business with compelling growth potential. On the flip side, there's a bear case, and it highlights several challenges that Ford faces. The automotive industry is highly competitive, with the traditional rivals and now new entrants like Tesla vying for market share. Ford's transition to EVs poses big execution risks. Ford has already stumbled a little bit with an aggressive capital spend that's not resulting in nearly as quick of a transition to more EVs and growth as expected. At the same time, the company still needs to spend billions more and is still losing money on its electrified business. Economic uncertainties like rising interest rates and inflation could impact consumer spending on vehicles. All of these risks are present even before we consider the impact of potential tariffs on Ford's supply chain, which is heavily tied to our neighbors to the north and the south. Now, while Ford's dividend provides an attractive income stream for investors, it doesn't guarantee market performance. Actually, it doesn't even promise consistent income. Ford's yield is partly based on special dividends, which are not guaranteed in most years. The base dividend of 15 cents per share per quarter works out to a yield of 5.5%. That's a lot lower than the 7% yield you might have seen on a charting tool. Ford has lowered and even paused its base dividends at times in the past based on economic conditions and its own cash flow needs, so the payout might be less safe than you think. Looking beyond valuation and the dividend yield, the bottom line is that the company's success hinges on its ability to execute its EV strategy and navigate a challenging industry. Now, while Ford has the potential to deliver solid returns, especially if its initiatives gain traction, it may struggle to consistently beat the market given the competitive and economic headwinds and the tens of billions of dollars it will cost to build its future business. All right, let's wrap this up. At The Motley Fool, your comments make us all smarter. Please comment with your own research and insights about Ford. Tell us what stock you want to see us tackle next. Go to fool.com/invest. You can receive the top 10 best stocks to buy now.